Thank you everyone for tuning into Optiongig. This is your host Vivek and I come before you to present the summary of last week, that is starting from 2nd of December 2019 to 6th of December 2019. As usual, we'll review the trades, we'll review how market did, but before we get into all those, first thing, let's start with our quote of the week. Alright, so quote that I want to talk about for this week is, when you feel like quitting, think about why you started. This is an apt quote, especially for those who are just starting into options trading. And I have a few friends who were very enthusiastic when we started discussing options to begin with, but made a few trades and then later on quit. When I inquired, they said, it's okay. I really don't have to learn about it. Life is going smooth. The fact of the matter is that option trading does need some investment. Investment of your time, investment of your intellectual capital, and investment of your passion. So you have to find why you want to do option trading. That is the most important before you get into how to trade options. And the reason why I'm saying is that when you hit a hurdle, and you will definitely hit a hurdle, you will have losses. There is no trader who has never faced any loss. If somebody comes and say to you, all my trades have been always profitable, I never had a drawdown in my portfolio, simply a liar. So, but when you get into those situations, when you have a down day, the reason why you got in will keep you moving forward. The times when you feel like quitting, if you have a big enough reason of why you want to do option trading, that will serve as a motivating factor to keep you in the game. The reason could be anything. It could be, let's say, I want to protect my portfolio. It could be, I want to generate an additional source of income apart from my regular day job. It could be, hey, this could be my stepping stone for my own personal financial freedom. Or, hey, I'm getting close to retirement. I would love to trade options while sitting at a beach. I don't know. Pick your poison. Every reason is the right reason. Whatever reason works for you, find out why you want to do options trading. Because the why is very, very important. Once you figure out the why, all the troubles, all the hurdles that you face while executing the how of option trading will become easier to navigate. So when you feel like quitting, go back and think about, why did you even start option trading? Have I reached that goal? Was that goal so important to me? Find out something for which is very important to you, and that goal, that why will carry you forward. Okay, now let's jump into the market summary section. Again, not too much changes in the market in the previous week. If you look at Spiders S&P 500 ETF, opened at 314.59 and closed at 314.87. The change was only 0.28, which is not even 0.1%. It is 0.09%. Same is the case with Dow Jones Industrial Average. DIA ETF, it opened at $281.45, closed at $280.70, a decline of 0.75 points or 0.27%. So Dow Jones Industrial Average actually declined. Even though it went higher on Friday, overall for the week, Dow Jones Industrial Average actually closed lower. The next one we want to look at, broad market ETF, is QQQ, which represent technology. QQQ opened on 205.11 and closed at 205. Again, a slight decline of 0.11 points, or a decline in terms of percentage 0.05%. Again, almost unchanged. The only ETF where we saw some real change is IWM, which is a small business in ETF, opened at $162.15, closed at $162.82. Not a big change, but if you compare with the other broad market ETFs, it actually changed 0.41%, 0.4%. So while during the week market has visited many places, but in the end it came almost where it started the week. Okay, so that's the overall summary of the market. Now let's get into our next section where we talk about trades. Total number of trades closed were 27. Out of 27, 24 were profitable trades. And like I said, every trader has its own share of losers. I had 3 losers, but I'm pretty happy with the percentage of win, almost 90% win rate, which is great. The number of trades that we opened last week was 25, much higher than what we did in a previous week. And the reason was the fluctuation in the market. Even though the markets ended where it had almost begun, but in between, throughout the week, it had visited many places. And that had resulted in higher volatility. With higher volatility comes more premium. So I was pretty active in the last week. Also, during the last week, it was a perfect time to open the trade because the January expiration was 45 days to expiry, which we know from back testing that it is the perfect time for those who are looking to harness theta decay. So both the combination of higher volatility during the week and January being 45 days to expiration helped us, and I wanted to put as many trades as I possibly can. Not going overboard, still keeping some capital on the sidelines to ladder into the trades if required, but I was pretty active in the last week. Okay, all right, so let's get into the top trades that we want to discuss. So first one is top 3 profitable trades that we closed. The first one is we closed out our GDXJ position 42 put. So we closed this individual trade, but we also opened a trade for January. So the closing of this trade resulted in $728 profit, but I'm not celebrating yet. This is a part of the trade that we had to roll out from December to January expiry, and hence I had to close out this December. I collected additional premium when I rolled out. So even though this individual trade has made profit, if I count all the previous trades that I've been rolling, it is still not profitable. I still have a January trade which is open. And in my January trade, I have a $1, more than $1 premium collected. So we'll see where GDXJ goes. It's been a long journey on GDXJ. I opened a bullish position somewhere in September, thinking GDXJ will go higher. That time it was 42. Like it always happens, stock may not do what you want them to do, and GDXJ then fell down like a rock. And I have been defending this trade since then. So I've been continuously rolling this trade from October to November, November to December, and this is as a part of a rolled trade that I had to close the December trade last week. Okay, the next one up is the plain vanilla iron butterfly EWZ, which we closed last week. made some $176. This was an iron butterfly which was centered at 44, and we had bought the wings at 37 and 49. It was order closed. It hit our profit target. When we opened it, EWZ was closer to 44, and it went up and down, and on the day of closure it came right back between 43 and 44. Because of the passage of time, the theta and the volatility decay, the trade was profitable and it automatically got closed. Again, as a part-time option trader, whenever I open a trade, I also put an auto close trade so that when it hits the profit target, I don't have to babysit and close it, it automatically gets closed. The third one that I want to talk about is the covered call on Baidu, ticker symbol BIDU, that we closed last week. We had opened this covered call on Baidu at 125 strike price, and Baidu never made it to 125 strike price. The initial premium that we had taken was $1.69, and then I closed the trade on 5th and retained $131 premium. Pretty happy with this. Overall, Baidu is not a great stock for me. I had bought some stock earlier and I was stuck with it, and Baidu fell down. All I'm doing is doing covered calls and reducing my cost basis. Now, by doing this particular covered call, I have reduced my cost basis by $1.31. Alright, these are the top 3 profitable trades. We had closed 27 trades. Obviously not possible to go through all the 27. I want to go through the top trades and see what lessons can we glean from them. Okay. Alright, here are my losers. Fortunately, the losers are not really very big. The first one which I closed was Baidu's $115 put. I had a put open on Baidu with $1.65, and I had closed this as a part of the closing of $125 covered call. Even though I lost some money in this, $51, I made it more than enough on the covered call side, which was $131. Combination of the covered call and the short put, when I completely closed the trade, I made money in it. Even though I lost money on the put side, I more than covered it in the call side. The next one where we lost some money is closing of our $75 short put. I closed this trade as a closure, as a part of closing the overall strangle, in which I had a $75 short put and $85 short call. In the $75 short put, I lost $27, but I made more than enough on the $85 short call. So overall, strangle trade was profitable, even though I lost money in this particular individual trade. Again, when I close my trade, when I look at my positions, I look at in totality. So even if an individual trade or one leg of a trade is making a loss, really does not matter, because the overall trade was profitable. Okay. The next one is again similar to that. It's a XOP trade which we had rolled up from $17 to $20. Now I also had a $23 short call. So today I closed both the trades, made money on $23 short call, lost money on $20 put, but only lost $10 here, made more than $10. So overall trade was profitable, even though I lost money on this individual short put. I'm not worried about that. Alright, now let's come to the next one in terms of the new trades that we opened. And these are the top 3 trades in terms of how much of the premium that we have collected. So the first one up is rolling up of GDXJ from 20th December to 17th January. Like I had shown earlier in the closure trade, closing trade of a profitable trades, I had as a part of a rollout, you close the December trade and you open a January trade. So when I closed December trade, it was at $728 profit even, and then I opened a January trade for $644 premium. Now again, I have been rolling this trade out for quite a few months. We've been making multiple adjustments, and till now I've collected $1.04 in overall premium. Let me show you some history behind this. Okay, so this is the GDXJ. We started this 42 in September. I was bullish on GDXJ, so I sold a 42 put and a 42 call, and GDXJ never touched 42 after that. So what we did, we rolled our 42 put from October to November. Then again on end of 22nd of October, we rolled our November put from November. Sorry, we rolled our November put to December. So you buy back the November put, paid a debit of $5.88, and opened a December put with $6.13. Now today, last week, what we did was we closed out the December put and opened up a January put. So we've been rolling this trade on and on because GDXJ has always been below 42, and if it doesn't come reach up to 42, I'll continue to collect premium and reduce my losses. The next one up is sold 4 contracts of Slack Technologies, ticker symbol WORK, WORK, for 17 Jan expiry. It's at $22.50 short put and collected $1.44 as a premium. I am getting bullish on Slack. When we opened the trade, Slack was at $22.97. So I opened very close, the nearest at the money strike, which was $22.50, and collected decent premium. Again, instead of buying the shares, I sold a put and gave myself some room for error. So even if Slack goes down, my trade will still be profitable until it gets lower than $21. Okay, and if it stays above $22.50 by the end of 17th January 2020, I will retain $576. So means I made $1.44 on a $22.50 stock, which is, I think, a decent return for close to 45 days. The next one is we sold an iron condor, very tight iron condor on RSX, which is a Russian ETF, again expiring in January. And interesting thing is that we collected $1.64, and this is an unbalanced iron condor, because if you really look at it, on the put side we have a $3 wide wings. So $24 is a short put and long put is $21. But on the call side, we have only $1 long, $1 wide wing. 24 is a short call and 25 is a long call. So this iron butterfly has no risk on the upside, because we have on the upside the width of the wing is $1, and we have collected more premium than $1. So even if this ETF goes to 25, 30, 50, we have no risk on upside. We will still close the trade with $64. And on the downside, if it falls down and we have to buy the shares, our break-even point is at $22.36. So which is, I think, pretty low from where the stock was trading right now. Stock was close to 24 and our break-even is $22.36. And I'll be okay to own the shares at $22.36 and if stock falls down. Okay, I guess that covers all the trades that I wanted to talk about. Again, Thank you for your time today. I really appreciate you joining me on these sessions. It keeps me honest, and I'm hoping that it also benefit you. In case if you have any questions, always feel free to write it to me. Thank you. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.